If you are buying a home or refinancing in the next 12 months, the credit score you have been watching is no longer the one that matters. Your mortgage credit score just got replaced, and the score lenders used for 30 years is being phased out. Did you know 2 new credit scores can now decide your mortgage rate? Did you know one of them counts on-time rent payments that the old score completely ignored? April 22nd, 2026. The day the mortgage credit score game changed. The Federal Housing Finance Agency and HUD jointly announced it. Fannie Mae, Freddie Mac, the FHA, all three are now accepting 2 new credit scoring models, FICO 10T, VantageScore 4.0. The 30-year reign of FICO Classic is ending. By the end of this video, you will know which score lenders are actually pulling on your file, what the new models reward and punish, and the exact moves to take this year before broad rollout hits. 2 scoring models, one April 22nd decision and one 20-point gap that decides whether you get a mortgage or get denied. By minute 4, you will know which side of that gap you are on. First, what actually changed on April 22nd. For 3 decades, mortgage lenders used FICO Classic, one score, same formula, same data inputs. If you wanted a Fannie Mae or Freddie Mac mortgage, that was the score that decided your rate. On April 22nd, 2026, the FHFA and HUD said 2 new models can now be used. VantageScore 4.0 is live immediately through a rollout to 21 approved lenders. FICO 10T is following close behind, with historical credit score data being published this summer. 2 new scores, same loan, different number, sometimes different by 20 points. Quick reset. Quick reset for anyone just jumping in. On April 22nd of 2026, the FHFA approved 2 new credit scoring models for every Fannie Mae, Freddie Mac, and FHA mortgage in America. FICO 10T and VantageScore 4.0. Your old classic FICO score is no longer the one the lender uses. Now here is what they are using instead. Here is what makes the new scores different. VantageScore 4.0 includes things the old FICO never looked at: on-time rent payments, utility payments, telecom payments. If you have paid your rent on time for 3 years but never had a credit card, the old model showed you as a thin file. The new model shows you as a paying tenant. FICO 10T uses what is called trended data. It does not just look at your current balances. It looks at how those balances changed over the last 2 years. Are you paying down debt or just shuffling it? The old FICO snapshot could not tell the difference. The new one can. The old score said you owed $5,000. The new score knows whether you are climbing out of it or sinking deeper. Let me show you what that looks like for a real borrower. Take a borrower with a 650 Classic FICO score. They have been a renter for 5 years, always on time. They have 1 credit card, balance going down. Their VantageScore 4.0 comes in at 685. Their FICO 10T at 668. Same person. 3 scores. 35-point spread between the highest and the lowest. On a $400,000 mortgage in 2026, that score spread is worth somewhere between 0.5% and 0.75% on the interest rate. Over 30 years, that is $50,000 to $70,000 in interest, from which score the lender pulls. Same borrower, same loan, tens of thousands difference based on the model. And here is the timeline most people are missing. Only the 21 approved lenders are using VantageScore 4.0 right now in the FHFA limited rollout. Most lenders are still on Classic FICO. The Tri-Merge credit report from Equifax, Experian, and TransUnion has not changed yet. FICO 10T historical data publishes this summer. Broad rollout of FICO 10T to all lenders happens later in 2026 and into 2027. By the end of 2026, most mainstream lenders are expected to be using FICO 10T or VantageScore 4.0 as the primary model. Right now, you are sitting in the transition window. The score that gets pulled depends on which lender you walk into. That is rate roulette. And it is going to last most of this year. Before I show you the 4 moves to position yourself under the new models, you need to hear the one factor that just got added to your credit file, and most people have no idea. Quick favor. If this is the first time anyone has actually explained the FICO 10T rollout to you, hit that like button and drop a comment below. I read every single comment and reply personally. Share this with anyone you know who is buying or refinancing a home, and don't forget to subscribe. We put out several new videos every week. Drop a comment. Are you buying or refinancing this year? Yes or no? Okay, here is exactly how you take advantage of the new models. Move 1. Start reporting rent payments now. Both new scoring models include rent payment history. If your landlord does not report your rent to the bureaus, you can do it yourself. Services like Experian Boost, Rent Reporters, Rental Karma, and Izusu let you self-report rent payment history. Some are free. Some cost a few dollars a month. Pick one. Get 24 months of rent history reported. That alone can move your VantageScore 4.0 several points higher than your classic FICO score. Watch this part carefully. Move 2. Pay down balances visibly, not just on time. Under FICO 10T, paying the minimum is not enough anymore. FICO 10T uses trended data. It looks at 24 months of balance history. If your balances are going down month over month, you get rewarded. If they are flat or going up, you get penalized, even if you are paying on time. Strategy: pick 1 or 2 cards. Pay them aggressively to drive the balance down each month. Let the trend show on the trended data file. 24 months of declining balances rewrites how the new model reads you. Pay attention to this. Move 3. Shop lenders. Ask which model they use. This is the single biggest play in 2026. When you shop mortgages this year, ask every lender, are you using Classic FICO, VantageScore 4.0, or FICO 10T? Then ask them to pull a soft inquiry under each model they have access to. Most will not volunteer it, but they can do it. If you score higher on VantageScore 4.0, go with a participating lender. If you score higher on Classic FICO, stick with a traditional lender. This is the only window where you legally get to pick your scoring model. By 2027, the choice may be gone. Most channels miss this. Move 4. Know which utilities and bills you can add. VantageScore 4.0 reads alternative payment data, including utility and telecom payments. If you pay your cell phone bill, your internet bill, your electric bill, and your gas bill on time, you can get those reported through Experian Boost. It is free. It only counts the on-time months. Late payments do not get added. For a thin file borrower, this alone has moved scores 15 to 20 points. Use it. Let me bring it all together. April 22, 2026, FHFA and HUD greenlit VantageScore 4.0 and FICO 10T for Fannie Mae, Freddie Mac, and FHA mortgages. VantageScore 4.0 is live in a 21-lender rollout right now. FICO 10T broad rollout comes later this year. By 2027, Classic FICO is on its way out. The score that decides your mortgage rate is changing under you. Start reporting rent. Pay balances down visibly. Shop lenders and ask which model they pull. Add utility and telecom history. Here is what to do this week. 1. Sign up for Experian Boost or a rent reporter. 2. Pick 2 cards and start aggressive paydown to build trended data history. 3. If you are buying within 12 months, make a list of 3 lenders and ask each one which scoring model they use. The whole exercise costs you nothing, could save you $60,000 in mortgage interest. One last thing before you click off. There is a 620 mortgage floor that just got removed in November. I cover that in the next video. But the rent reporting move I want you to make today is the fastest score lift available. If this video helped you, please give it a like and leave me a comment with your thoughts or questions. I read every comment and reply personally. Send this to family or friends who are buying or refinancing soon. And make sure you subscribe, because we put out several new videos a week, all free. And the next video you should watch is the 620 credit score floor. Just got removed from mortgage underwriting. What subprime buyers need to know in 2026. Make sure to subscribe so you don't miss it. It'll be uploaded within the next 2 days. See you there.